Hey guys, how are you? If you are new on my YouTube channel Health Insurance, then please subscribe my channel and share it with your friends. So basically in this video I am going to tell you about health insurance. So let's start our video. So here's it. Basically health insurance from Wikipedia, the free encyclopedia. Health insurance or medical insurance, also known as medical aid. In South Africa, the type of insurance that covers the whole or part of the risk of a person incurring medical expenses. As with other types of insurance, risk is shared among many individuals by estimating the overall risk of health risk and health system expenses over the risk pool, and insurers can develop a routine finance structure such as monthly premium or payroll tax provide the money to pay for the health care benefits specified in the insurance agreements. The benefit is administered by a central organization such as a government agency, private business, or not to for profit entity. According to the Health Insurance Association of America, health insurance is defined as coverage that provides for the payments of benefits as a result of sickness or injury. It includes insurance for losses from accidents, medical expense, disability, or accidental death and dismemberment. So here's it basically background option is also provided here. So I'm now moving further here. So here's here a health insurance policy is number one is a contract between an insurance provider, example an insurance company or a government, and an individual or his or her sponsor, that is an employer or a community organization. The contract can be renewable annually, monthly, or lifelong in the case of private insurance. It can also be mandatory for all citizens in the case of national plans. The type and amount of healthcare costs that will be covered by the health insurance provider are specified in writing in a member contract or evidence of coverage booklet for private insurance or in a national health policy for public insurance. The second one is US specific. In the US, there are two types of health insurance: taxpayer funded and private funded. An example of a private funded insurance plan is an employer sponsored self funded ERISA plan. The company generally advertises that they have one of the big insurance companies. However, in an ERISA case, that insurance company does not engage in the act of insurance, they just administer it, and therefore ERISA plans are not subject to state laws. ERISA plans are governed by federal law under the jurisdiction of the US Department of Labor (USDOL). The specific benefits or coverage details are found in the summer plan description. An appeal must go through the insurance company, then to the employer plan fiduciary. If still required, the fiduciary decisions can be brought to the USDOL to review for areas of compliance and then file a lawsuit in federal court. Here's that the individual insured person obligations may take several forms. Premium, the amount the policyholder or their sponsor, example an employer, pay to the health plan to purchase health coverage. US specific, according to the healthcare law, a premium is calculated using five specific factors regarding the insured person. These factors are age, location, tobacco use, individual versus family enrollment, and which plan category the insured chooses. Under the Affordable Care Act, the government pay a tax credit to cover part of the premium for persons who purchase private insurance through the insurance marketplace. Uh, Associate uh, deductible, the amount that the insured must pay out of pocket before the health insurance pay its share. For example, policyholders might have to pay $7,500 deductible per year before any of their health care is covered by the health insurer. It may take several doctors' visit or prescription refills before the insured person reaches the deductible and the insurance company starts to pay for care. Furthermore, most policies do not apply copay for doctors' visits on prescription against what deductible. Here's yet copayment, the amount that the insured person must pay out of pocket before the health insurer pay for a particular visit or service. For example, an insured person might pay $45 copayment for a doctor's visit or to obtain a prescription. A copayment must be paid each time a particular service is obtained. Co-insurance, instead of or in addition to paying a fixed amount upfront co-payment, the co-insurance is a percentage of the total cost that an insured person may also pay. For example, the member might have to pay 20% of the cost of a surgery over and above a co-payment, while the insurance company pays the other 80%. If there is an upper limit on co-insurance, the policyholders could end up owing very little or a great deal depending on the actual cost of the service they obtain. So here basically Exclusions: not all services are covered, but while items like use and throw, taxes, etc. are excluded from admissible claim, the insured are generally expected to pay the full cost of non-covered services out of their own package. Coverage limits: some health insurance policies only pay for health care up to a certain dollar amount. The insured person may be expected to pay any charges in excess of the health plan's maximum payment for a specific service. In addition, some insurance company schemes have annual or lifetime coverage maxima. In these cases, the health plan will stop payment when they reach the benefit maximum, and the policyholders must pay all remaining costs. Out-of-pocket maximum: similar to coverage limits, except that in this case, the insured person's payment obligation ends when they reach the out-of-pocket maximum, and health insurance pay all further covered costs. Out-of-pocket maximum can be limited to a specific benefit category, such as prescription drug, or can apply to all coverage provided during a specific benefit year. So basically, this is all about health insurance. So if you like my video, then please subscribe it and share it with your friends. Thanks for watching this video.